most of the world still owns no Bitcoin. Most of the world's money still owns no Bitcoin. That won't be true in a decade. And that's like a really unique opportunity. I think it probably gets to about parity to gold. That's my baseline prediction. So at current prices, that's a little over $1 million a coin. I think this is a summer of accumulation because I actually think it's probably the best risk-adjusted time to buy Bitcoin in its history. That doesn't mean the absolute returns are better. Obviously, it would have been better if you bought it when it was a penny. But there were so many attendant risks at that point. Mm-hmm. There were trading risks, there were custody risks, there were regulatory risks. You probably would have put it in Mt. Gox and then lost it. You might have had your wife put it on a hard drive and throw it out in a dumpster like that person. I mean, there were massive risks, and a lot of those risks have gone away, but the upside is still really substantial.
In this interview, Bitwise CIO Matt Hougan delivers a compelling breakdown of Bitcoin's long-term trajectory, arguing it's not just an investment, but the emergence of a new form of money. He compares Bitcoin to gold and predicts it will become a multi-trillion-dollar store of value, with the potential to hit $1 million per coin by the end of the decade. Hougan dives into current market dynamics, including ETF-driven demand, shrinking supply, and investor behavior since the launch of the spot Bitcoin ETFs. He also explains why we're living through a once-in-a-generation moment, comparing this phase of Bitcoin adoption to gold's explosive rise in the 1970s after the collapse of Bretton Woods. Stick around until the end, where Hougan shares why now might be the best risk-adjusted time to accumulate Bitcoin and what the world could look like once it becomes the global monetary standard. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Matt.
Do you think of it as a money, a currency, a commodity, just an investment asset class? How do you see it?
Yeah, I definitely think it's an investment asset class, but I don't think that's the primary descriptor, right? That's just sort of like a tool when you're building portfolios, so it only works from that lens. I think of it primarily as money. That's how I conceive of it in my mind, as this new pristine form of digital money. And the first time we've had money in a digital format or in a movable format detached from the state, which is what gives people some sort of discomfort. But I think of it as money. I mean, you can use it as money. You can store wealth in it as money. So it's money and it's an investment or an asset class as well, which is fine. It can be both of those things.
Where do you fall in the spectrum of what Bitcoin's total reach is, I guess, if you will?
Oh, wow. That's an interesting question. Let me think of how I would answer that. I think of it as sort of a series of markets with maybe like an orbit of markets with declining probabilities of taking bigger pieces. So a way to make that maybe more easily framed, if you think of the hard asset store of wealth market as $25 trillion, that's primarily gold. That's like the first orbit. And its probability of winning that market to me is extraordinarily high. And its probability of expanding that market is also extraordinarily high. Like I think that market will be bigger. So maybe that's a $50 trillion market opportunity, and it can take 75% of that market, and it has a high probability of that. You can then go out to sort of broader financial transactions like unit of account style transactions or denomination transactions or global. And those are all concentric circles before you get to those 450 or $900 trillion. And the way my mind works is you just have declining probabilities of getting out to those places. And I tend to think in probabilities. So I don't know how far out it will go. The beautiful thing from a investor's perspective is who cares? Even if you just get this first one, it's the greatest investment of all time. And I have a high probability of that. And if you get that first one, your probabilities of getting these other ones improve as well, right? And it's sort of, people talk about it going from store of value to unit of account to medium of exchange. And that's sort of the way my mind works is it has to achieve this to achieve this to achieve this, right? Mm-hmm. It's like one of those. And so, and I think the probability is sort of like that necessarily, because you have to guarantee it achieves this before it can even think about achieving that. So I don't know where I end up on that, but I think the number is very large.
Matt Hougan lays out a clear and compelling vision for where Bitcoin is headed next. He believes we're still in the early stages of adoption, what he calls the store of value phase, and compares our current moment to the early days of gold after the collapse of the gold standard in 1971. In the short term, Hougan predicts strong price appreciation, driven by a simple imbalance. Massive demand from institutions, ETFs, corporations like MicroStrategy, and even governments far outweighs the limited new Bitcoin supply. He expects this excess demand to push prices up through each psychological resistance point, with Bitwise forecasting a move to $200,000 within the year. Looking further ahead, Hougan sees Bitcoin reaching parity with gold by the end of the decade, which would mean a price of over $1 million per coin. While he acknowledges the future will eventually bring slower returns and mainstream adoption, he emphasizes that we're not there yet. In fact, he believes this may be the best risk-adjusted opportunity in Bitcoin's history, as many of the early risks, like custody and regulation, have faded, but the upside remains. He compares today's moment to the 1970s, when gold surged from $35 to $800 as the world adjusted to a new monetary reality. Just like then, Hougan argues, we're witnessing a redefinition of money, and those who recognize it early stand to benefit most.
What is your outlook here over, I guess for this cycle, and then also we'll call it this 10-year, gold rush of I look at it, I guess, of the four phases of money, collectible, store of value, medium exchange, and unit of account. I feel like it's somewhere, in that phase 2 store of value. It feels like we're getting towards the medium exchange area, just depending on rules, regulations, and things that are happening. More people are using it. So we're really, like you said earlier on, at this exponential part where we're starting to kind of go up that S curve. Where do you see price in your mind over the next 6-12 months? And then let's extrapolate out maybe in the next decade or so.
Yeah. So from a 6 to 12 month perspective, the way we look at price is just by looking at supply and demand and thinking about investor behavior. So I can be pretty specific about that. When we look at supply and demand in the Bitcoin market, we see a fundamental mismatch between net new demand and net new supply, by which I mean Bitcoin produces 165,000 Bitcoin a year, right? That's the issuance, and that's the net new supply. And whether you look at ETFs or corporations like MicroStrategy or governments, they're buying hundreds of thousands of Bitcoin, maybe in aggregate 1 million Bitcoin. So there's this massively more net new demand than there is net new supply. And that means existing holders have to sell. And the reason I bring that up from a short-term price perspective is if you think about Bitcoin's price, since really the ETF launched, it's gone in 2 phases. It went from 50 to 72, and then it treaded water for 6 months. And then it went from 72 to 100. And it basically has treaded water since then. The reason it stopped at 72 is that people are people, and that was the previous all-time high, and you had to work through people who were willing to sell there. The reason it stopped at 100 is people are people, and some people are willing to sell at 100, right? Like the 2 sleeping stop loss orders on River are 100 and 1 million, right? That's just like, because people are normal people. I bring all that up because I think this demand is just chewing through the number of people who are willing to sell at $100,000. And if I'm right and it persists, it will eventually exhaust them. And I think in the next 6 to 12 months, it'll move up to the next place people are willing to sell. And I don't honestly know what that number is. I don't think it's 117,321. I think it's probably more likely to be a round number, like 150 or 200 or 200K. And so I think there's going to be upside movement over the next 6-12 months because there is this excess demand. And our prediction at Bitwise is it'll get to $200,000 this year. But we could be wrong about that. But that's what I think. I think this cycle, which I'd really say lasts through this decade, like until 2020, 30, I think it probably gets to about parity to gold. That's my baseline prediction. So at current prices, that's a little over $1 million a coin. Again, I could be wrong. Like, could go down. It's hugely risky. It's not financial advice. But if you think about, sort of the level of penetration it's gotten to in each cycle, this feels like the right sort of scale of penetration. And I think the supply dynamics are about right for us to get there. So that's our prediction at Bitwise. 200K by this year, $1 million by the end of the decade. We could be too bearish. We could be too bullish. But that's what makes it a prediction.
Would it be safe to say, or correct me if I'm wrong, do you see this diminishing returns in Bitcoin? And maybe you do, maybe you don't, but maybe it's not in short term, but maybe you do see it 5 years or 10 years or 20 years from now? How do you see it? Because that's always a big thing too, obviously, and that's why people go into other assets. They oh, Bitcoin, I missed it, I'm too late. So I'd love for you to kind of square the circles. We're talking about summer of accumulation, and also people, we're talking about this taking in tranches, and eventually you tap out of the market, whether it's now or 100 years from now, obviously. So how do you square this circle, I guess, when you look at all of it together?
Yeah. I think that's right. Look, eventually it's going to be boring.
We don't have fiat conferences anymore, Matt, right? We have Bitcoin conferences, exactly. But we don't have fiat. So someday we won't have Bitcoin conferences.
That's exactly right. I mean, eventually it's going to be boring, and it's going to cap out. The world isn't infinitely large, or we'll stop caring about the fiat denomination. It'll just be priced in Bitcoin, in which case it's just a Bitcoin. Look, I do think we're going to get there. We're fortunate to be living through this age where that's not the case, where we're discovering what Bitcoin is. And that's sort of the age that you have this opportunity. I think this is a summer of accumulation, because I actually think it's probably the best risk-adjusted time to buy Bitcoin in its history. That doesn't mean the absolute returns are better. Obviously, it would have been better if you bought it when it was a penny. But there were so many attendant risks at that point. There were trading risks, there were custody risks, there were regulatory risks. You probably would have put it in Mt. Gox and then lost it. You might have had your wife put it on a hard drive and throw it out in a dumpster like that person. I mean, there were massive risks, and a lot of those risks have gone away, but the upside is still really substantial. I just mentioned we think it could be $1 million+ by the end of the decade. That's a 10x from here. That's hard to find in any market if we're right. So I do think I think it'll eventually be boring, and that'll kind of be great. But we have many years. We have decades to go before we get to that point, and we're just really fortunate to be present in this moment. I'll give you maybe one last analogy. I keep giving these old school analogies. Maybe that's my role. Great. To gold. The world was on a gold standard for a long time until 1971, and gold was $35 an ounce. And we broke the gold. We broke the back of gold, and gold went from $35 an ounce to $800 an ounce in about a decade. And what was happening there was the world didn't know that gold had a role in a fiat world. The world was like, whoa, we're on this new system. What is the role of gold? Is it a barbarous relic, as some people referred to it as? Is it just this shiny metal that's used for jewelry? Or does it have a future in this world? And as the world realized it had a future in the world, the price went from $35 to $800. And today, obviously, it's 3,000 plus. But that was a unique moment to invest in gold. That was the best period to invest in gold's history, right? 5,000 plus years. That decade was the best decade. And that tells you that when the world sort of accepts that this new form of money is going to exist in the future, that's the best time. And we happen to be living through that in Bitcoin. The world is coming to accept that Bitcoin has a place in the world. And, that's why we're up, 100,000x, and why I think we could 10x from here in the next 5 years, because we're living through that moment where the world comes to accept it. Once everyone accepts it, and governments hold it, and institutions hold it, and pensions hold it, the returns will be much reduced going forward. But we're not in that moment now. Most of the world still owns no Bitcoin. Most of the world's money still owns no Bitcoin. That won't be true in a decade, and that's a really unique opportunity.
Matt Hougan makes it clear. Bitcoin isn't just evolving, it's accelerating. We're witnessing the transition from speculation to adoption, driven by real demand from institutions, corporations, and governments. The supply is fixed, the demand is surging. and the world is beginning to wake up to what Bitcoin truly represents, a new form of money, independent of the state. While the road ahead isn't without risk, the opportunity is historic. As Hougan puts it, this may be the best risk-adjusted moment in Bitcoin's entire history, a moment that won't last forever. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.